this is the 23rd of September, 2022, about 8:25 a.m. Central Time. Folks, I have been up since 2:33 in the morning watching this action. You got to look. Dow got down to 29,711, 37.15 in the S&P. So we're within striking distance of the June lows. Do I think to hit today? No. I came in last night and I was telling my traders, I said, markets might get a recovery on Friday. Wouldn't surprise me if you get a lot of people that want to do some evening up going into the weekend. I don't look right on that at this point, but I haven't thrown it out. I want you to take a look at energies getting smashed. So what's happened is the United Kingdom unleashed, if you will, its crazy tax plan at a time that interest rates are soaring. Today, because of what the UK did, the markets are pricing in that the Bank of England at the very next meeting has to go up 100 basis points. It's a radical shift from just yesterday's action. I'm not sure it wasn't coming because we knew that this plan to unleash taxes, cut them if you will, all you hear about is that for a person making $1 million a year, the U.S. equivalent, they'll get the equivalent of a $65,000 tax break. And they go, oh, that's more money than the lower income people make. Yes, but what kind of tax break do the lower people get on a relative basis? So when you put it all together, that's how you have to look at the market. Everything's relative. And people take that out because reporters like to make it all look like it's a headline. In the grain markets, look at the selling pressure coming in here. Now, I'm going to repeat what I said. At this time of the year, when you go and get the crop out of the field, you put pressure on the market. Afterwards, as you get further along, you say, are those bushels enough? Are we shy? Or are they better than what we thought? So right now, it's the supply issue. I look for that to come down. I think we overdid it this morning in the big break in the bonds and the notes. I think people were in a state of panic, to be honest with you. Even look at natural gas. Everything's coming down. Gasoline. The market's gone into a state of panic today because of all the central bank action that has taken place. Dollar reigning supreme, got up to 112. That put the euro down under 98 this morning. The British pound down 200 points, 2 cents. And now there's a big talk of parity. The bets 2 months ago were 100 to 1 that you'd go to parity by the end of the year. There's 7 to 1 right now if you look at how they have their equivalent of Fed fund futures there. Japanese yen, I think that's doomed. You can't tell me you're going to intervene and it's going to work. And remember, on a day like today, normally the yen gets a big bid because people are uncertain as to what's going on. You're not seeing that. Bitcoin got down back under the 19,000 level, as you can see as well. So let's take a look at the day's information. We get the S&P Global Group's September manufacturing and service sector PMI numbers at 845. I think they'll just be glanced over. The Eurozone economic data all week. You can see the PMI flash 48.5. The estimate was 48.7 versus August 49.6. And that's how it goes through each category. We get the cattle on feed report at the end of the day. The marketings in August, they're up supposedly 10%. That's a huge number. If that's the case, you've taken away cattle for immediate delivery in the market. And on feed, we didn't increase very many. So you can see they're trimming back the supply. Now, I wrote a big report today for my full subscribers on the government unleashing of its tax plan in the UK. Let me just give you the idea here. You're raising rates to fight inflation, and at the same time, you're cutting taxes on everything. Buy a home, the tax is cut. Get fuel, the tax is going to be cut. Everything. Can it work? It didn't work when this was done a couple of decades ago, so my doubt is that it's going to work now. Now, it depends how long they keep it in place, what they do, they can trim. In Russia, the conscripting is going on, so 300,000 men taken, and you see the busloads of people, families crying, all right. Those men are not going right to the front line. They've got to be trained, retrained. This is a long process. Do they have armaments for them? I mean, it's just the beginning of a step. Putin's in trouble. You call this up, it's not going to be good at home. I mean, imagine a wife, 2 kids, the husband's gone to war. Do you think that's something there? He didn't want to go. He was taken forcibly out of the house. You don't go, 10-year prison sentence. So that's why the airports are full, the train stations are full, people are on the run, all right? That's what we in the West think. I'm not in Russia. I don't know what to think from their point of view. I'm guessing I'm right. I mean, it would be like in America, we're fighting and all of a sudden everybody around us has been drafted. Not the best thing that you could have. I talk about this in a lot more early in the mornings, and I think you realize that, at 5:30 in the morning. What I start doing is for my subscribers, I start covering all this. So this morning, I can tell you, in the thick of it, I'm watching the market just crater to the downside. And they were cratering. Now we're getting that little bit of a reprieve as the market's going like this. Which way at the end of the day? Does the market decide to tip again? If it does and gets under this morning's lows, I don't know where the vacuum ends. If that holds, you might get where people just say, enough, I'm taking some money off the table. With the short covering that happens, that could be it. Do I think you'll get new buying? You know, if you listen to stock analysts, they'll tell you, oh, as the market's falling here and you're picking up stocks you couldn't get at these prices before. I'm not going to argue that. Okay, if you buy a little now, you buy some 2 months from now, 3 months, if you got a plan, that's fine. In the futures, timing is everything because leverage is 90%. We use that. In ETFs, timing is everything because it's based on what the futures are doing. I hope you understand that. So spiders and ETFs, in most cases, the big ones, are based on what we do in stock indices, the bonds, the notes, the metal markets. That's not to say there aren't others that are based on what the bank stocks are doing and so on. You know what I'm talking about there. But timing's everything. I think I do a pretty good job of it. I can tell you this. I am not in the markets right now. Okay? This whole week haven't been in the markets. It came off winners last week, so I'm happy. Does that mean that I won't get losers going forward? No. Did I try to get short this week? I did. Did the market allow me to get in at the prices I want? No. Do I care? Not really. There's always another opportunity, and that's what I'm trying to tell you. Give me a try. We're not talking a lot of money here. We're talking that you spend more on your Starbucks than I'm talking. And by the way, on a Starbucks in a day or two for my whole month of subscription. So it's inexpensive. If you try my combo, for example, you get the 5:30 in the morning futures, 9 o'clock, which is from here just a few minutes, I'm going to start recording what's going on in the stock market. I like that first half hour to go by in the stock market because it has to deal with getting even with what the futures did. And I know you'll tell me there's aftermarket trading. There is. It's not big. The big boys come in at 8:30 in the morning, and that's where we go. How do you do this? You go to our website, under research, follow my finger here, go right up over my head with your cursor if you're on your PC, and you'll see an icon. Give it a click. Give it a try. You can quit at any time. So you decide if this is for you. I think you'll enjoy it, and I think you'll see some things that you're not used to seeing. I'm Ira Epstein. I'll see you over the weekend with our weekend edition of our market wrap-ups. Trade well today.